You have to dissect the quarter a little bit. You had operating income very strong in the quarter. Advertising growth remains very strong. Cloud growth remains above 40% with 31% margins, the highest ever for the cloud business. But if to the concern point, you did have the core business with unit growth slowing to about 15%. They did have some tougher comps from last year, so it is a bit of a noisy number. But that is the concern today. You have 17% growth Q2, slowing to about 15% Q3. Q4 is typically a tougher comp on unit sales as well, so we may even see that slow a little bit. But overall, we still think Amazon can grow kind of 20%-ish core growth longer term with you have AWS and advertising, your higher margin businesses. We get to about a $2,000 price target. On the low end, we think around $1,500. We're still staying with Amazon here, but clearly some worries from investors today.
And the advertising revenues that you mentioned, the AWS, I mean, that really helped. That huge beat that we saw in operating margins in the third quarter and will help operating margins in the fourth. But when it comes to the core business, Aaron, I mean, that is still the core business. That's still the lion's share of the revenue. How concerned should we be that perhaps Amazon, may not have the dominant position as we do see retail in general in the markets do not so bad?
Yeah, I mean, we still think Amazon can grow above the market rate from an e-commerce perspective. So we still think e-commerce is in the early innings. Relatively, you're about, let's say, less than 20% online penetration if you exclude some of the non-traditional e-commerce categories. So less than 20%. We still think that goes to 40% plus longer term. And within that, Amazon's getting 50% of incremental share. We don't think that stops, especially with Prime adoption. To your point, though, as more consumers get Prime adoption, obviously that adoption starts to slow. You're not going to be able to grow 25, 30% forever. So we think growth will come down to more of the high teens rate on the core commerce business, which we think is fine. But from the operating margin perspective, clearly cloud, advertising are going to be your margin drivers over the near term here.
Hey, Brian, it's Tim. Aaron, sorry, it's Tim. I heard Brian Oslowski, who's the Brian we're talking about here, reference on that call that he was having trouble predicting the holiday period. And for Amazon, that to me is either concerning or I'm confused by that. Talk about that. It's their most important time of the year, their most important quarter, and yet this is the guy that's supposed to be able to give you some insight into that.
Yeah, so I mean, obviously that was the concern for investors, and as we've said, historically that has been a slower growth period for Amazon in terms of just the comps being more difficult. I'd say it's a little early to predict the holiday season. So far, we haven't seen any big macro concerns. As we said, we think there's some noise in that Q3 number. So we're still expecting decent Q4 numbers. Clearly, the tax cuts should help. Pretty much full employment right now. So all those factors should be positive for Amazon, but we're going to have to watch it as we go along here.
It seems to me, I realize, I understand that the game in the market on any given day in reaction to a profit report is all about the expectation. Did you meet it or beat it or not? Number two, what did you say about the future? So I understand that. But as you look at these numbers, revenues were up 30% year over year, right? Profits blew the doors off of what the expectations were, and yet the market is reacting like it was a crap report. But really on a lot of operating
That's a
levels,
financial term, Tyler.
That's a financial. Yeah, I almost used the sterner word there, but whatever. I mean, talk me through that. If I'm an owner of Amazon now, am I worried about the business, or am I happy with the way the business is going?
Yeah, I wouldn't say you're worried, although clearly expectations have been very high on Amazon. The stock essentially doubled over the last year still, so expectations, even though the stock's been down a little bit recently, still very high. And if you look at Q4, they guided conservative for Q4 in both revenues and operating income. But if you look at the last 3 quarters, they've beaten operating income by roughly $1 billion each quarter. So we think there's a bit of conservatism in that guidance. We do expect the Q4 beat to continue here, mainly driven by AWS and the advertising upside, which drives strong operating margins. But clearly, yeah, high expectations. When you see that unit growth, which has been a core concern for investors that we've talked to recently, that unit growth deceleration, we think that starts to get easier as we go into 2019 from a comp perspective. But optically, that's looking a little bit negative right now.